What's going on? Chris here. We're going to go over the week's daily closing thoughts. For the most part, the thing that I'm using for my signal is there's a little more here that would make you confused. Let's try to isolate so then it's easier to explain. So 39.95, the bar closed beneath it, and that line was support. It held back for 1, 2, 3, 4, 5, 6 candles, and it finally broke. So this block, this order block, is gonna be solid, and it's gonna turn into a breaker block. It basically is saying the bulls at a 12-hour closing basis have capitulated, and the trend is there's a possible reversal for a trend. So I did get a signal from my oscillator that happened on the 16th of last week. This signal happened on Friday the 24th. So we can get an idea of just the lead time that I can get with my oscillator. My oscillator can get me around I guess, a week in advance. My timing solutions, the money flow index can get me in 2 weeks in advance, like 2 to 3 weeks in advance. The oscillator for the market cipher, I got the Fu Manchu market cipher, and I just modified it, and I use it on the 3-day, and that one gets me a week in advance. And then this one is more like 2 to 3 days in advance, because we got to retest to the upside, because as you can see, we closed above this wick, so it looks like it's going to open right out there, and it's going to hold as support to retest into here. So that suggests that this is the high of the bearish order block. So we could go as high as all the way to 40.28, spot 40, and we could put it on the week, and we can't put it on the week, but we could put it here on the week. Oh, we don't want to put it on here. We want to try this one. Nope, maybe we don't want to put it on here. This is my default stuff. And it's saying the week high was 40.82. So one could argue we could go as high as 40.82. Now, if I were to use kind of my moving average traps, the resistance that we're seeing here on the lines is around 40.40 at max, 40.40. So it doesn't seem like that. It doesn't seem like we would reach 40.28. We could even just move it down right here at the doji, and 4009 sounds more like it. We could wick above, but for the most part, we expect to close below on the day, right there. So we could use that as resistance, even for an entry. But for the most part, we're bearish. We just broke it on Monday. This bullish order block will be solid, signaling that the bulls capitulated, and we're beginning a now significant downtrend. If we're to look at the bull trap, bear trap signal, so this is the slow. This is the 40-period weekly moving average channel, and we can see where it's acted as like a bear trap, bear trap, bear trap, bear trap, bull trap, bear trap, bear trap, bear trap, bull trap, bear trap, bull trap, bull trap, bull trap, bull trap. Now we broke out, and now we're closing back in. We this is the signal that it closed back in. It reclaimed the trap, and now we want to see a pump into the outer band of this trap. And this wick here is the previous week low. So that would act as resistance if we wanted to use it. But we might not need to use it. 40.42. So 40.40, 40.42, that's kind of where we see the upper bound for rejection. If we were to go down to like the daily, it does look like, or the 12-hour, that's kind of that's what this is about here. It's a 12-hour fair value gap, and it's basically the wick of the candle before the engulfing, and then the wick high of the candle after the engulfing. And it just moved really fast, and we want to see price come in, and this is roughly the 3-day high. We put it to the 3-day. This is the high of this 3-day candle. And the idea is because we might not be able to reach the last week high and purge above it and come back below, we're going to try a 3-day high and versus a daily high. Daily high, it's roughly the same thing. The daily high and the 3-day high, it's the same thing. So a break above, a stop hunt above the 3-day or the daily high, and then we looked for a smaller time frame fair value gap right next to the 3-day or previous day high, and this is kind of the fair value gap we got right here. If we were to put it on the 5-minute, if we were to get a complete fill, we're looking at 40.20 roughly. We would put a red line here. 40.20, that's kind of just where we're expecting price to come back into to get rejected. So that's kind of just what I'm thinking, and going into this, I'm thinking, okay, we're reclaiming the trap zone. The bulls are now wrong, and we're getting ready to get rejected pretty hard. Even on the faster kind of bull trap, bear trap, it's setting up really nice resistance right where we're thinking. If we were to kind of move this to the top, bring to the front, we could see that the line is right at the top of this fair value gap. 40.40. 40.42 is the wick of the week before. 40.40 or 40.38 is roughly the beginning of the 12-hour fair value gap, which is the candle wick low of the 12-hour candle before the engulfing, the fast move. And so that's kind of just where I'm expecting price to come, which is around in here. Stop out some people that went short, really, that made this move, and then hit that 5-minute fair value gap, let it get filled, get in for a short right there, and see if it can ride. And we expect it to be a retest rejection, and then we close beneath the previous year open and close below, and then we would get a nice cascade down to 3,200 or 3,000. Obviously, there are no certainties, there's only probabilities, and as we can see here where we closed, I think, above weekly support. So that looks like a nice close above weekly support. So we're at weekly support, so it makes sense that we would get a pump back into this zone and for a nice sell. So that's kind of just the plan. The plan is sell, sell, sell. And when it pumps to around 4,000, 4,020, like that's kind of where I got my eye, around that area. and any kind of market structure break to the downside, I'm going after it. And I almost think that we got a naked 4-hour breaker here. I'm thinking this is gonna be naked. I think it's gonna not be able to break above to touch this 40.37. 40.42 was that last week low, and 40.40 was kind of like a number we were thinking about. But when we called out the number for the end of the fair value gap, it was 40.20. So if we got a hard stop at 40.20, which it happens to be where this order block is, if we were to put a line across the top of that, it's pretty close to where, yeah, we don't expect it to go any higher from there. If we were to use the highest wick here, it's pretty close to where we think it's going to stop. And it happens to be where all these moving averages are. So we'll see what's going to happen on this retest. But it looks like this gap might stay here and get defended. Like we might, I don't know. Like we got to just kind of play it as it comes and manage it. So that's pretty much it. I wanted to talk about we're at weekly support. I expect a retest back up here, but we're in the trap. We're looking more bearish. The probability of the 3,000 to 3,200 price trend actually going there, the probability of going there is a lot higher now. And it looks good for taking profit. Or converting or transferring or hedging against risk. Like it really makes sense to do that. And if we were to look at like semi-correlated assets, like we got a naked weekly breaker here. I expect us to come back and retest it here on the dollar. And we broke out, we retested into the 12-hour breaker here, and it looks healthy to continue higher. It looks like the bulls are in control there. If we were to look at the euro, we did not break the bulls yet on the euro, and the euro is associated with risk on. So we're waiting for this to break down. If we were to measure out like resistance, we see that it's failed resistance, weekly resistance, deviation, and it's had wicks into there. So we expect maybe one more wick into there and then get rejected. On the 12-hour, we've already broken down on the a faster time frame compared to the weekly, the 12-hour, and we expect a rejection out of this area, and it's just kind of consolidating, getting ready to make that move for breakout, retest, rejection. Japanese yen, we actually hit weekly resistance here, sold off one wick, 2 candle, 3 candle, and completed its move to retest this naked breaker. Now we're looking for it to reverse and then break new highs. If we were to try to figure out where this Japanese yen is going, I don't know if we're going to be able to see it here, but if we were to try to look for maybe a weekly fair value gap, we got one right here. This is one area we can expect the Japanese yen to go to. So it still has a little higher to go. We expect it to come straight up into here, and basically this weekly fair value gap. Or it could be like this, we could say there's a naked breaker here. They're usually synonymous with each other. The fair value gap and the breaker, they're right next to each other usually. And then we're looking for a break up to the upside. We can see here this hasn't been retested yet. So because it hasn't retested yet, it could just really surprise those bears and close above. Retest resumed to the upside. VIX, we have a bearish weekly order block, and this is the thing that's been really suppressing price down, all the way down. Because we just got a weekly or 12-hour bullish breaker retest, we are pretty much mostly done with the move. We just need to come out of it and resume. And if anything, if with the pattern it's making, the bears are wrong, nice risk to reward, it would be nice to long this going into the monthly close. Usually in the monthly close, I don't expect a lot of volatility. Maybe with the monthly close, we come back to the yearly open. That would be significant to me. And then VIX, we got this naked 4-hour breaker, so it's implying we're going to come back into it, and we're going to see how we react. Do we just explode back up? I don't know what this is all about right there. And then we're not going to look at commodities. Here we could just see that copper's bearish on the 12-hour closing basis. And here we can see lumber is bearish on a 12-hour closing basis. It looks like it's going to ping pong. So if you're looking to buy lumber, it looks cheap. And I say buying it at 40.10 is on the spot price is a good deal. But it looks like this is a naked breaker, and this is a naked breaker. It's just going to ping pong, just consolidate, and that's what I expect. So just looking at everything, it just looks like we're getting ready. It's been saying kind of like risk off kind of atmosphere for a while. Like we're getting more signals that are stacking to show that is more of a stronger signal. It just more frequently represented on the bears, and the risk off signal it's giving. And then obviously our sell signal on the 3-day for this oscillator. So that's pretty much it. I don't want to go into the rest just because pretty much all we need is just a really good, thorough reflection of just how we are approaching the attitude with the SP500 and what our view is. And I'm thinking that this is it right here. 3-day, we purge the 3-day high or daily high. And then we hit the 5-minute fair value gap, and we see where we are. Do we completely purge it? And then if we completely purge it, where's a nice market structure break on like a 15-minute or a 30-minute that we could get in for a movement to the downside? So that's pretty much it. Decided to really go in depth with the SP500 on this one, and just reveal my thoughts and the plan for that. And the target, when we get a runner in, we're gonna just not have. We're just gonna put a Hail Mary target, and then we're gonna see where it reacts to in price. But definitely we'll get some take profit on the day, and we're gonna just let it run if we get a runner. And we are looking forward to the elevator to the downside. So anyways, thanks for watching. See you in the next video.